Hello everyone. Let's talk about the astonishing transformation of the financial landscape in November 2023. It's not been an easy year, but the markets have finally shown some promising signs of recovery this month. Equity markets are back in action, with all major indexes showing strong gains. This change can be largely credited to our optimistic investors, who are hopeful that the central banks might hold back from hiking interest rates any further. The bond markets are also showing a positive response to the good news on inflation. Yields have decreased on U.S. Treasury and Government of Canada bonds, resulting in an increase in bond prices. This trend is consistent even at the global level, and we haven't seen this stellar performance since as far back as December 2008. Now the oil market hasn't echoed the happy sentiments of other sectors, instead continuing its downward slide in November. This downtrend mostly reflects increasing worries around macroeconomic factors like China's oil demand and supply surpluses. Lastly, we have been observing a cool-down in the job market, with dwindling Canadian job openings and upsurge in U.S. jobless claims. Manufacturing and service sectors are slowing down, with a decline noticeable in Europe and the UK. There's also a hint of a slowdown in China's export figures for the past 7 months. Be rest assured, our team is here to see you through these promising yet complex market conditions. We encourage you to maintain a disciplined investment approach, focusing on long-term goals, and keeping emotional decision-making at bay. Remember, regular portfolio reviews and investing in a diverse mix of assets is essential for effective risk management. Keep in mind this information is for educational purposes only. For a personalized investment strategy, always consult with a financial advisor.